Hello everyone, today is Friday, May 7th, 2021. My name is Evan. Welcome back to our weekly stock market analysis videos. If you're brand new to these videos, here's how they work. We break our analysis up into two parts. In part one, we look at everything that went on this week in markets. So we go beyond just price itself. We look at market internals, we look at sectors and correlations and volatility, and go underneath the hood to get a better sense and understanding of what's moving and driving markets. And then in part two, we jump into the charts. We look at those trends. We try and best position ourselves looking ahead. We put everything from part one into context and hopefully help us make some better decisions into the week ahead. So hopefully that sounds good to you. Let's jump into some of the headlines, some of the takeaways from this week. We had some relative technology weakness out there. We saw the Nasdaq being the underperformer this week, and in fact the only of the major indices to close negative this week. We saw the VIX pop briefly, pretty aggressively, but then it got faded even more aggressively than it popped. We're going to talk about that. And remember, last week's takeaway, we had kind of the headline takeaway was that there were warning signs that were creeping up. First time we've sort of had the flag that we threw up that said something different otherwise than just, hey, it's bullish out there, ride the trend. That's been essentially the takeaway from these videos for the past many months at this point. Last week, we finally said, okay, there are some things to take notice of now. This is maybe where you want to pump the brakes. And that was about applicable for about 2 days early this week, Monday and Tuesday. And then by the end of the week, the cavalry arrived and markets are closing at highs. So we're going to talk about that a little bit later. And the US dollar, new lows, new recent lows. Didn't break to new year-to-date lows, but new recent lows this week as well. So let's jump into the numbers here. On the right-hand column, you can see this is the one-week numbers of the major indices. You can see the Dow Jones was the leader this week, 2.66% to the upside. That's a strong showing. S&P up 1.26%. Nasdaq down 1%. Russell basically sitting right in the middle, flat to slightly higher on the week. And world stocks, international stocks, minus the United States, they did very well this week as well, up 2.46%. Now, if we look at market internals here, we are still seeing very strong numbers here, very supportive underneath the hood. If we look at the number of 52-week highs minus the lows made in the NYSE this week, we had 1,723 net 52-week highs this week. That's a great number. That's a strong number for this market. We saw the AD also strong this week, 2,900, almost 3,000 cumulative sort of stocks that were moving to the upside over the past 5 days. And we see the number of stocks above a 20-period simple moving average in the S&P 500, very bullish sort of territory, 75%. Now, if we put those breadth numbers into context here, we chart, we graph the cumulative number of stocks hitting 52-week highs minus lows. This is a picture perfect uptrend at this point. You can see up into the right, very sort of linear here, growing and just moving exactly how you want to see it. So this again is the underlying strength of the market sort of illustrating itself to you when you look at it or visualizing it in this fashion here. I think this speaks to just the strength that we're seeing out there. And again, I always like to remind on this chart, because I get excited when I see this chart and I say, yes, this is good, this is bullish, this is one of my favorite charts that I look at. But remember, this doesn't speak to a multi-day 2, 3, 4, 5% pullback, right? That can happen at any time. So it's not to, for you very, very short-term traders, maybe this is less meaningful, but for the intermediate folks, this is important. This is good to see. If we look at sector performance on the week, you can see energy back to the top of the list. Remember, energy now was taking a break for the past 3 weeks. So this speaks to classic rotation here. If you've been following along in these videos, we know energy, we were charting this, we were talking about this. This is the hottest place to be in the first quarter of this year, going into, I guess, the second quarter as well. This was what was driving the market, all the stocks in the energy space. But then for the past, 3 or 4 weeks, it really cooled off. It got very cold on the energy side. In fact, the 1-month numbers actually went negative here, right? So we have this dry spell in energy. It was taking a break. It was consolidating. It was pulling back. And now you're seeing that rotation right back into energy, coming back strong this week, up 8%. So a very strong showing there. Materials, second spot. Financials, 3. They pretty much ride together, it seems, at this point. When energy's hot, financials tend to be doing pretty hot as well. It's that small cap mix, or the underloved. You call it the the tech growth and the stay-at-home stocks. That was the kind of the narrative earlier in the year. But those 3 at the top of the list. On the downside, we had utilities, we had real estate, we had consumer discretionary, all closing in the negative, in the red. Technology also there in the 4th spot, closing red, but not quite in the bottom 3. Take a look at technology now as well on the 1-month performance numbers. It is the only sector now in this market that is negative, down 2% over the past 21 trading days, the past month of trading. So that is interesting. It is, consolidation and a pause in growth in tech. If we look at correlations, a couple of things to point out. So we're back to a 10-day correlation. This is our usual sort of look back here. It can be very noisy, and so we always sort of take this with a grain of salt, and we look at these numbers to sort of just kind of pique our interest, see what the narratives are, see what's working and moving together. And a couple of standouts today, 2 standouts today. One is international stocks, so ACWX, so international stocks with the US dollar. This makes sense. This is intuitively, generally speaking, when the US dollar is declining, this is a undercurrent. It's sort of a wave for foreign equities to do a little bit better. So that is kind of what we saw taking place here. Just a very, very strong inverse correlation that is creeping up. The other interesting correlation is this USO, right where my cursor is, USO to NDX. Take a look at this. This is a negative 0.803 inverse correlation. So what this is basically saying is energy stocks work, and this is commodities, but so we're looking at USO, the oil ETF, but we're basically seeing, oil rallying, energy stocks rallying, technology sitting aside, right? Taking a break or going in the other direction. And so I think that's actually pretty interesting. It's kind of the sharpest inverse we've seen creep up there. And we're seeing that, of course, play out in the sector ETFs as well. So that's what's looking interesting there on the correlations. If we look at volatility, basically this week we saw everything just come down and cool off. We closed at an 18 VIX last week. We got over 20 this week, intra week, but we ended up settling back down to 16 here. So some very kind of more historically normal levels. I would consider it more bullish levels. The fact that the VIX is backing off here. We still have a pretty steep 3-month term structure, but generally speaking here, seeing the VIX term come down across the board, back to 16, very, very healthy, constructive action there out of the VIX. Now, if we look at interest rates and credit, we can see yields basically were down this week across the board. 5-year yield down 10%, so that's pretty impressive. We saw investment grade credit bonds working nicely higher as well. If we look at dollar and commodities, dollar had a big down week. So dollar is down now 1% on the week, 2% on the month, 10% on the year. That bear market in the dollar continues to support lots of things. I mean, generally speaking, the stocks in general, but gold, commodities, silver this week as well, bouncing back pretty aggressively. We saw Bitcoin as well see a little bit of follow through, up almost 2%. DBA, agriculture, crude oil also doing very well this week, and natural gas as well. So we put it all together and we've got check marks across the board. This doesn't happen too often, but we got a solid A here for our sort of rating system, looking at breadth, looking at performance, looking at risk sectors and volatility and credit markets. Everything here looking good, acting well this week. So it was constructive to see, despite tech being sort of left out from some of the sunshine and bullishness. Now, if we look at our trading systems, we see kind of the same. We saw in terms of Merlin, basically, we see it still at 90%. We had a decent amount of activity. We had some turnover this week. So we got stopped out of some names and we basically are immediately replacing them with new positions. So our Merlin strategy is liking this market environment, and it is essentially saying, yes, let's continue to be long and stay the course. So as positions are getting stopped out, it is immediately finding some new opportunity and replacing those stopped out trades. So Merlin basically, at the end of the day is still basically invested the same amount. Lamerick here got very aggressive this week, buying the dip, buying the blood on Monday and Tuesday and Wednesday of this week. So it got more aggressive. It will be peeling a lot of that off, I think, next week, early next week. So you're going to see this percentage invested is probably going to shrink quite a bit here coming into the start of next week, because it did kind of jump in early in the week, and it's probably going to be looking to roll out of some of those. So that's the way we're positioned. If you want to learn more about these two trading systems, click that link in the top right hand of your screen. And with that, we'll be back in just a moment here with some charts. We are back. We've got TC2000 open. We are looking at our equity market grid here. So we have price itself, the white dashed lines on all of these charts, and the multicolored dots are a custom smart trend filter that we've developed for TC2000, measures price volume across time, and it helps us determine trend and trend strength. So when we look here at a weekly period, weekly time frame across all of these indices, you can see that we only had one real change of outlook, so to speak. If we look in the bottom left here, this is the Russell 2000. Notice we had some yellow dots printed last week, and you can see that actually resolved to the upside here, so back into bullish territory for the Russell 2000. So that's constructive to see, supports the uptrend, even though we know it's still kind of consolidating from a price action perspective. We'll look at that in just a little bit. That uptrend is sort of back in track. There's enough strength there for this filter to turn up. Now, all of the other, so S&P, Nasdaq, ACWX here, we had bullish behavior, bullish outlooks printed here for many, many weeks. And so no changes to all of these other markets. Same thing with Nasdaq. Even though the Nasdaq was down this week, we're still seeing bullish trend here on that long-term time frame. Now let's go down to a daily chart. Let's look at things a little bit closer, and we get a different picture. And this is, kind of the beautiful thing about markets is you can trade them on different time frames, and you have different stories unfolding across different time frames. So if we look here at the stories unfolding in the S&P 500, you can see starting from Tuesday of this week, we went down into neutral territory here. And so we persisted there Tuesday, Wednesday, Thursday, Friday, back into neutral. Neutral tells us that we want to just pay a little bit of attention, look a little bit closer. There's some mixed signals creeping in, but we still give the benefit of the doubt to the prior signal, which in this case is bullish. So S&P 500 is printing yellow. Nasdaq went bearish this week. So on the daily chart, it flipped. It was neutral when we did our video last week on Friday, and it persisted neutral. It turned down on Wednesday, continued down Thursday. It did go neutral on Friday, but again, we give the benefit of the doubt to the prior signal, which is now to the downside. So we got to be a little bit cautious here. Out of all the indices, which we already know, NASDAQ here, as by this simple price and volume trend filter, is telling us that caution is advised on the daily chart. Russell, bottom left, neutral basically across the board. ACWX printing a nice green signal here into the close of the week. So that is the trend, sort of objective trend outlook for all of the indices, weekly chart, daily chart. Let's take a look now at some candlestick analysis. Let's look a little bit closer here at what's going on in the S&P 500. Let's start there. So when we look here at the S&P 500, this is the sort of messy little grid, horizontal levels we've been paying attention to in the S&P 500. Remember the outlook last week. So this is where we were last week, right in here. And I know this chart's a bit messy. Let's actually just give this a little more room. Let's give this a little more room. This is where we were last week. And the talk last week was we've got some really tight ranges. The S&P's gone nowhere. It's moved totally sideways. We had some of those other warning signals out of the VIX and other things that we had talked about there. And so that was the landscape. We were looking at basically a breakout one way or the other coming into this week, looking for some vol expansion. And we did. We got that. We got it, in fact, right away on, well, not right away. It was Tuesday of this week, and we saw basically the breakdown out of this range. We saw the volatility expand to the downside initially. We got all the way down to about 41.20, 27, I guess, here in the S&P 500 before the cavalry arrived, before the dip buyers showed up and basically rallied us back up into the upper end of this range. We chopped around for a little bit, and then we just pushed to the upside. There was no conviction out of the sellers. We had this brief sort of, expansion lower, no follow through selling, and therefore the market just pushed to new highs. So my outlook here, my read on the S&P 500 is we essentially just got a fresh breakout to new highs in the S&P 500. That's bullish. We know the longer term trends are bullish. Life looks good again here for the bulls. I know it gets tired, it can be tiring of saying that, and we ask ourselves, when will it change? When will this all change? Well, it's exactly why we kind of do these videos, is because we're keeping up to date every week with what's going on from the long term to the short term. And eventually one of these short term sprouts of volatility here is going to get some follow through, and we are going to be, cascading and pulling back and seeing a longer, a bigger correction. But we have to just continue to measure and sort of map it. And right now is not that time. So we essentially had the ingredients for the bigger pullback. It did not happen. The exact opposite basically occurred. We failed to break down, and then we immediately sprung to the upside. So this is bullish behavior. When I look at the S&P 500 now, you can look very simply at, let's see if we can get rid of this. Well, let's just go to a different board. Well, I guess we're back into this old trend. Got lots of boards here where I've drew. So when I look here at the S&P 500, I mean, you can use, I like to generally use closing prices on my horizontal levels rather than the wicks, but obviously I'm not trying to be precise here. I'm generally thinking for the S&P 500, 42.10, 42.15, somewhere in that zone is where I want to see the market continue to hold above to keep that upper level momentum. And then you basically have just the lows from Tuesday, the lows from last week here around 41.28. If you want to give the S&P a little more room, and quite frankly, that's only 3%, 2.5%. That's your line in the sand to essentially stay long risk, keep the momentum intact, and continue to participate on the long side. If we start breaking below here, then all bets are off. Then we have the ingredients for that bigger correction that could be unfolding. So that's very simply the way I'm panning and looking at the S&P 500. If we look at the IWM here, you can see this is still a very different story. It's still just very much in consolidation mode. It's gone absolutely nowhere since February, and that really hasn't changed. The levels are the same. I think we've been looking at, let's see, well, the levels are pretty clear. I guess I don't have it drawn, but we're essentially, I mean, we have the all-time highs up there around 234. We've got this 208 structure in here that we tested multiple times, but we are getting this series of kind of higher highs, and then we have a slight series of lower highs that could be developing in here. So it's just classic consolidation, and that's what we're looking for to see when this eventually breaks. Until that happens, it's more of the same, and I would expect more chop to basically unfold. Nasdaq 100 is where things get a little more interesting. This is where we have some more actionable sort of insights that we can draw from this week. So if you recall, last week, again, we had this very tight range. We had this consolidation in here that we were paying attention to, and we did get the breakdown this week, and it occurred on Tuesday. We saw the big breakdown. We saw more, volatility Wednesday. We did get the turnaround Thursday. We got some follow through today on Friday, but notice this is very different than the S&P 500. The S&P 500 launched immediately to new highs. Nasdaq 100 is still down here. It's off of highs now, and there's all this supply right up here. So the Nasdaq's in a tougher spot, and it is below this pivot high from February. So from a relative perspective here, the Nasdaq has to prove itself still. I am much less excited about the NDX here or the Nasdaq 100 than I am the S&P 500 from a pure supply demand perspective here. The fact that we rolled over from this range, we're below this pivot high here. So I think you have to be a little more cautious. Now, if we come in next week with a gap up and we start trading over 338 and we start getting back up to these levels, then great. We're right back on track. Bulls have arrived. Bull market continues. That's awesome, and I would be excited about it, but I have to say I'm a little more cautious here in the very short term for the NASDAQ, just until it can prove itself and prove it can get back up to these levels. So that's it. That's the high level there for the Nasdaq, for all of the major indices. Hopefully that was helpful. And let's look at a couple more markets. Let's go to the VIX. I want to illustrate this here because the VIX, like we talked about, got all the way up to 20. Actually, in fact, it got all the way up to almost 22 this week here on Tuesday. And look how aggressively it got faded. Fell right back down to 17. Implies to me that this market is still stubbornly heavy on VIX. In other words, it wants to still unwind here. It was a little jittery last week. We were making note of that, and we wanted to see if there was an actual regime change, if there was a change of character, that the VIX could start really holding over 18 and more ideally into the 20s. That would give us just a more convincing bears are here. Maybe this market sustains a pullback, but it just didn't happen. We saw the exact opposite happen, so you have to respect that. And so the VIX very quickly back down into the 16s. Seems like, I wouldn't be surprised to see this back down here around 15s, testing these lows here again in the coming weeks. Maybe not in a straight line, but certainly in the coming weeks. Now, if we look at a couple of other markets I want to talk about is gold. So if we look at gold here, this had a big week. So when we look at the performance out of gold, you can see we had a 3.5% up week. And so we are back. When we look at the weekly chart here, you can see we're back to sort of this channel perhaps that we're in, or this sort of downtrend that we've been in on a longer term basis. Let's see, my chart is not behaving like I wanted it to. Let's see if I can fix that. There it is. So we had, something like this. Again, I don't want to be precise in this channel, but you can essentially see the lower highs that we've been trading in, right? We can create this little channel just like that. And you can see we're getting back up to an interesting spot. So we'll have to see. It's had a nice move up. This is the point at which it usually would fail. So if you want to be suspect here, you basically are saying, okay, well, maybe the top is in here in gold in the very, very short term, and we're about to sort of roll over and put in some type of, new low. I think what we're all waiting for here on the weekly chart would get me, I'm actually okay with the fade around here. I think it makes sense for sellers to arrive. But if we can pull back into the 160s, put in a higher low, and then start to lift up, then then it starts to get the series of higher highs and higher lows going on a weekly time frame. That would be exciting to me. I think GLD, I like the effort out of the bulls this week. I'm a little cautious chasing this. I'd be hesitant coming into all this prior supply in here. And so that's the only thing I'd be paying attention to, but I'm willing to be proven wrong. If we can continue to find follow through, if we can go sideways, push up, then maybe we do have a more convincing change in GLD on a long-term basis. Same thing with silver. Had a great week this week, but it is coming back up into highs. There's a lot of overhead supply in here. So I'd be a little bit hesitant chasing it or establishing right now, but both of these markets could very easily be on a path to new uptrends. So we'll take it one day at a time. I'm just a little cautious there in the very short term. I want to end this video looking at some of the sectors and industries that stood out. So we're looking at these sectors and industries in the US markets here. This top list, there's 29 that are showing up here. So it's a custom scan I'm applying here to pull out some of the interesting sectors and industries. Most of what we see on this list here, so consumer defensive and materials. You can see steel, for instance, had a very strong week to the upside, 14%, blasting to new highs. This chart's about as vertical as you can get. Looks like a cryptocurrency. So steel, pretty strong here in its move. If we just sort by strength, in fact, well, actually, no, this is going to be the one-day change, so that's not going to help us. I will have to update that. I keep saying I'm going to do some work to refine this a little bit, so I actually need to do that. But essentially here, let's see if we can go back to sectors. Sorry, copper, top on this list as well. Very, very strong. Look at copper and look at this range it was in. So we had this nice consolidation here, and then we're blasting off new highs on volume. Steel, we talked about. Silver, we can see this very long sideways range here. Silver looks interesting. Chemicals, You can see here continuing to new highs, lumber and wood, all of your base materials essentially working very nicely this week. Dollar cratering, commodities working, and so you're seeing those all benefit. In terms of some other consumer cyclical names, we see footwear and accessories, personal services, publishing, home improvement, household and defensive. That's a good theme there. Discount stores, packaged foods, grocery stores. You see the theme here in consumer defensive that was working this week. We had some on the oil and gas, surprisingly not as many as I would think showing up here. We only had a handful showing up here in the space there for sectors, for energy that is. And then we have a bunch in industrials, a few too many to go through all specifically. Let's look at the bearish names that are showing up. So biotech continues to be very heavy. Look at this chart. Now, again, I look at this and could think of a very healthy sort of pullback on the weekly chart developing, but in the short term, it's still underperforming on a relative basis. So we still have other things that are working while this is sort of pulling back. So I am not outright bearish here on biotech. I think it's actually a very interesting sector here. I know some of our systems were looking at sort of establishing some positions here in biotech. And that's kind of the way I'm thinking about it. Gambling, pulling back pretty aggressively this week as well, 8%, closing on the lows. Health and information services, so looking again, coming back down, looking a little heavy here on a relative basis. Software, also pulling back, looking a little heavy here, looking a little different than some of the other markets. Specialty finance, I'm not sure what this even means. Let's take a look at some of the names in here. So here are the list of stocks that are making up this fairly heavy industry group. And last but not least, utilities also down here, breaking to new recent lows. Utilities are a little bit in heavy territory, at least this particular industry, which is the independent power producers. So that's it. Long list here of names on the industry side and sector side. So hopefully you find that helpful. Hopefully this video itself was helpful for you. Leave a comment below. I'd love to know what you're looking at this week, heading into next week. Anything I missed, anything that stands out to you, I'd love to hear it below. And as always, I want to thank you for tuning in and listening, watching long videos here on the weekend. Hopefully they are valuable for you. They certainly help me kind of solidify my thinking about what's going on in the market. So they are, a good sort of therapy for myself. So that's it. Enjoy the weekend. Thanks for tuning in, and we'll see you back here next week.